Well, thank you very much. Maybe as we speak, we can all introduce ourselves because I was not quite prepared with people's bios. So my name's Rebecca Gordon. I work at CRU Group. I'm a divisional director in the consulting division, and I've been responsible for building up the technology metals, battery metals side of our business. So they've asked me to moderate this session today, and we've prepared a couple of questions that we're going to discuss. In Anthony's absence, I might pick up some of the answers on nickel cobalt, or maybe David as well. I'll talk about nickel and cobalt a little bit, and then we'll open to the floor for any discussions that you guys would like to have. So if I ask the question, then maybe you introduce yourself as you start your answers. Would that do?
Yep.
Super. So my question that I'd like to discuss with the panel is that we're currently witnessing quite a lot of price volatility in battery metals, in all the technology commodities, in fact, perhaps due to difficulties in communication and understanding from the consumption side right the way back to the mining side, differences in timings of investments. And if we look back to history, we had a period in the late 1970s, at the end of the oil crisis, where we had major price spikes in moly, cobalt, lead, and oil. And then we had major price spikes when we had the Chinese boom in the early 2000s. That affected a broader range of commodities, so lead, nickel, zinc, moly, manganese. But if we then look at what happened to prices in the following 10 years, it took almost the whole 10 years for those commodities to come back to a reasonable price. So after the spike, the prices fell dramatically, and it was a very long period before those prices regained the status they were at before. So I'm just wondering, from the point of view of miners and financiers, what the industry could be doing in this current situation of high price spikes to manage that risk for the miners and the financiers, and maybe make better returns over the next period. So do you want to go first, David?
Yes, certainly. Yes, I'm David Merriman. I'm the manager of Roskill's Battery and Electric Vehicle Materials Division. Just really looking at the lithium side, and you look at the response that you've seen from the supply side already to the falling prices. You've seen a complete shift away from the lower margin products that were being produced. So that's the direct shipping ores, some of the not so used lithium mineral concentrates. So that's really been a bit of the first response to this, the slip away in prices, which has really been a bit of a false start really for the lithium industry. I think it's very clear to see that there is going to be a significant growth in lithium demand driven by electric vehicles, by energy storage applications. But there was a bit of probably an overexcitement in the build out of that initial capacity. Now, when you're saying that there may have been a weaker pricing period for, say, 10 or so years for a number of those commodities that you mentioned before, that really doesn't seem to be the consensus of the case for the lithium industry because of that strong underlying demand growth. And it's really a point of seeing how demand is going to be given a chance to catch up with that supply. Now, in the interim period that we're seeing, really at the moment, we're seeing a shift, a more integration between in the supply chain. So there's a lot of mineral producers or lithium mineral producers that are looking at that next step, looking at the lithium carbonate, lithium hydroxide production. But it's also how we're seeing it is that suppliers are really looking at now tailoring their products much more specifically to individual producers or consumers, really looking to kind of create that value add and that brand of lithium products. So we've seen a number of lithium mines in Australia now looking at low fine spodumene concentrates, particularly targeting the Chinese mineral conversion market and seeing how that can be a value add to that.
Do you see a challenge in the lithium market from an uncertainty around the final technology for the batteries inside electric vehicles? Because you see the move from carbonate to hydroxide and maybe eventually to metal or other technologies. I know that's a very long term away, but it does mean that the capital that's being deployed today may not have such a life as, a copper mine.
Yeah, certainly, and you're seeing that with, Toyota Tsusho recently announced that they were going to take a bit of a 2-year period from now to really reassess their further investment in the industry. And there has been this shift from the carbonate to hydroxide use, which is still ongoing. A shift to lithium metal at the moment, I mean, where would the capacity come from? There are very few reputable producers of lithium metal out there. So that would particularly cause not only the demand for lithium metal, but also a shift back to lithium chloride as the raw material source for that. So that, I think, at the moment is some years down the line. There's still a lot of research and development that needs to go into the shift towards lithium metal. But the shift towards higher nickel cathode materials and that shift towards the consumption of lithium hydroxide is ongoing. And there is still restrictions on the capacity that's available for hydroxide production of sufficient battery quality.
Interesting. Christopher, do you have a view on some of the other commodities that are used?
Right.
Do introduce yourself, please.
Yeah, I'm a mining equities strategist at Hallgarten and Company, which is, does research on mining companies and on the sectors. 2 points I'd like to make. The first one is the chain. The chain starts from the promoter, dare I call them that, but the promoter, through the investor, then the people who develop mines, right through production onto the end of mine. The weak link in all this at the moment is the investor. The promoters are always there if the investors are there and if there's a demand for the metal. And what is letting us down at the moment is the fact that we're not finding the investors out there. So we had lithium 1.0, and we've had the same type of thing. We've had graphite 1.0, we've had rare earths 1.0. We had cobalt 2 years ago, very fashionable. Booms and busts driven by the promoters producing too many entities. Not enough investors, or then suddenly having a surge of people into a metal, whether it's vanadium or cobalt or lithium, driving the prices up, then having the rug pulled from under them and the whole structure comes down. The investors get burnt. The promoters are waiting there, always ready to produce more entities. And so we're not getting that investment phase at the moment. Many people who look at the Canadian market blame it particularly on the cannabis boom. They say that the weed mania has sucked all the oxygen out of the room for equity promotions. That's true, I think. And that has affected even markets where cannabis is not a factor, like the London market or the Australian market. It's damaged all the stocks in those areas. But, you know, it is a case of excess. In all the metals, we've seen that. Even if we go back to last decade when nickel, for instance, had a massive spike. Yep. That hasn't happened this decade, but we've seen it in all those other metals that I mentioned. And then you get the hangover after that when the metals come crashing back to earth. And it's so dramatic, the difference between being unwanted, like a vanadium, to being extremely wanted, and then going back to unwanted again. It's sort of like a manic depressive market in these metals, and it has a hangover, and we're in that hangover now for many of these metals. The second thing is there is a mega trend, and the mega trend is in the battery sector, the EV sector in general, and many other sectors, to try and replace China as an area where you are dependent upon your supplies. And so what we're seeing is the construction of alternative supply routes. Once upon a time it was thought, okay, well, you could get your rare earths or another mineral from China, and then you could take it outside and you could process it. And then the Chinese said, okay, you've got to do your processing onshore. And now, particularly in the lithium space, I perceive that many companies in the battery space do not want to see that the lithium is coming out of a Chinese-owned mine, even if it's not in China, somewhere in Latin America, into China, and then they're dependent upon it coming back out again. All the Japanese and the Koreans are very sensitive about this, and now the Germans as well, to see that they can create entirely non-Chinese supply chains. And if you can capitalize on that by being seen as reliable by the LGs, the Samsungs, the BMWs of the world, then you can potentially get some financing from them. But the weakest link, to come back to my first point, is ultimately in the investors, because at the stage between the promoter finding a property that he thinks is promotable, then you have those seed investors to get in. And basically the BMWs don't want to invest in a Salar in Argentina that's untested. They only want to come in and after a lot of work's been done. And now because of the, this hangover period, we're seeing that the budgets are dried up for exploration and the work is not being done. And a good example is Cobalt, where we had a cobalt boom, phenomenal cobalt boom. Out of that, there was spawned 60, 80, 100, people, companies claiming that they had greenfield and brownfield cobalt sites. Not one of them has come into production, not one. And now we're seeing the price come back down. They never really gleaned enough money to develop. So, sometimes you get a crash and companies have a legacy of money left over from that crash that they can use to develop things. In the case of cobalt and lithium, very few ended up with enough in the bank to actually carry on through the dark times. And so we are essentially at a phase now, particularly in cobalt, where we're no better off than we were just before the cobalt boom. We know that there are quite a number of deposits out there, but none of them have advanced in any way towards production.
I think in cobalt and lithium, you are seeing the prices slightly above where we were before the spikes. Do you think it might be the wisdom of investors not piling in too rapidly that means we haven't gone well below the historic price or the start pre-spike, when we were sitting sort of the early teens for cobalt and 3,000-4,000 for lithium, weren't we? And we're now above that even.
Yeah, well, my view on cobalt is that that it's one of the most prospective metals out there, primarily because we have this, before there was not a perception that cobalt was that necessary. Now there is the perception that it's that necessary, but we don't have any more supply than we had before. So that does not, that augurs well, very well for cobalt in the future. With lithium, we had some projects that have now moved from the maybe phase into the going to be phase. And that's a better scenario in lithium than we've seen in cobalt, for instance.
Yeah, so I think in cobalt, a lot of the debottlenecking occurred in the Chinese market. So we had quite a high price going forward for cobalt, which was predicated on no response from the Chinese chemical and then the metal manufacturers. And I think the big shock actually in the recent years was how much hidden or fast to come to market metal capacity there was sitting inside China, and the appetite of consumers outside China to take that metal in areas that aren't quite so politically sensitive and where they aren't tracked quite so strongly and are able to take Chinese metal. And that led to that very dramatic fall recently in cobalt prices. But we do see in the long term that the intermediate supply remains an issue, and that dependence on Congo, if it's just such a high proportion of the material, is a challenge for the industry.
Well, as you say, the dependence upon the Congo, because there has been no reweighting away from the Congo, despite the year or so boom in cobalt. The market's as dependent upon cobalt from the Congo as ever.
I'd say it's a similar story even for the nickel side, on the requirements that are going to be needed for those nickel intermediate products, particularly class 1, and that competition from the existing industries, from stainless steel and such. There's really going to be an increased squeeze on the supply availability that is available for the battery cathode manufacturers, especially if we're seeing a shift towards more nickel intensity use in these high nickel cathode types. Yeah,
we're quite sceptical on the ramp-up speeds that have been announced for the latest nickel sulfate plants, and also the capital costs. To be honest, they're not in line with what we've seen in other investments in recent times. Are you going to ask all the questions, or can we ask the questions? You would very welcome. I'm very happy. Please do. We'll skip my second question. There's one at the back as well.
Thank you both very much. Two questions. Well, first of all, I think we can all assume that EV's here to stay, can't we? Christopher, that's a yes or no?
I would agree.
Yes, but I suspect, well, it was interesting, one of the talks before, talking about this thing that millennials and post-millennials are going to be less interested in the auto. And then there was a picture of the traffic jam in Peking, or Beijing. And the thing is, you can convert every one of those cars from being internal combustion to EV. The traffic jam is not going to go away, because if you allow the Chinese population to essentially have as many EVs per capita as the US has vehicles, then you're going to have the world's most phenomenal traffic jam ever. And I'm quite surprised that the Chinese just didn't make a decision that they weren't going to go for any sort of private ownership of vehicles in the future. Because when it comes down to it, it's a very highly urbanized society, and the Chinese, with their potential for dirigiste policies, could just say, well, we think you're all going to be you're going to be using public transport or shared vehicles in 20 years from now. We're going to totally skip the whole phase of you having a car that's going to be outside your house or parked in a garage, because you don't have a house. You don't have a driveway in China. I don't really understand how the take-up of cars that are being talked about for China is actually going to be of the proportion that is being speculated upon. I think at some point China will be at peak cars rather than at peak EVs or peak ICEs. They'll be gridlocked.
Well, we're not forecasting increased
But everyone
overall
else
annual
is going
sales.
to be having EVs, aren't they? We're all going to be driving EVs, aren't we?
Maybe. I meet people who say that they used to own cars in London and now say that they don't want to own cars anymore. That doesn't mean cars are going to disappear, but there is a sort of bit of a movement against.
There's a gentleman here with a question. And one at the back, I'm sorry.
Microphone appears elusive. I think the important thing is what you're not talking about. What we really need to know is how technology is changing over the next 5 years in each of these battery metals. In 5 years' time, will cobalt still be a problem, or will there be some replacement from other metals? And when you say dirigiste in China, I mean, the fact of the matter is China has achieved more in the last 10 years than America has in the last 100 years.
Should I pick up a bit on cobalt to start with? The cobalt market isn't just batteries. So you've got some incredibly strong growth coming out of superalloys. So all the super high efficiency coal-fired power stations, the new jet engines to make airplanes more efficient, the HIPs that we'll all have as we get older do require cobalt metal at the moment, and those are very poorly substitutable. So I think the risk for cobalt totally vanishing is minuscule. It could be trended down to the very minimum in a battery, but it does still give stability. So certainly at CRU, we believe there's very strong prospects for demand, not just in batteries. Yeah, and you do have choices. The gentleman at the back?
Hi, Rebecca. It's Gennady from Sumitomo Corporation. So we, for example, have quite a lot of exposure to nickel and cobalt through a big mine in Madagascar called Ambatovi, which, so we look at this quite a lot, and we pay a lot of attention to this space. Just to, not to be a buzzkill, but do you think that recycling and, materials coming from the recycling space, and also, end users substituting materials when prices get too high is a threat to sustained mining prices for commodities, right? So we've seen it in, nickel went up to $55,000 a ton in 2008, 2009, hasn't breached the $20,000 threshold pretty much ever since. Cobalt spiked as well, went down massively because you had a lot of, cobalt oxides or recycled materials come into the market whenever the price got too high. So do you think that, consumers' ability to substitute materials quicker, and also the imminent appearance of recycled material supply is a threat to commodity prices, and hence, a lot of these mining, a lot of junior miners out there and general investor sentiment?
Do either of you?
The recycling at the moment, recycling is definitely going to become increasingly important in the industries and required to meet the demand growth that we're expecting. Whether it will have an impact, particularly on the pricing, probably from the mid-2020s onwards, the demand growth that we are seeing and the available material that will be capable of being reworked into the market or recycled, with the exception of second use or even potentially third use in energy storage applications. There doesn't seem to be the volumes that will be available to really create a critical mass or the processing capacity there to deal with that amount of material, let alone the programs for collecting that material that are going to be needed in place. So recycling will become more important, but it will still remain a relatively minor supply of materials into the market over the next kind of 8 to 10 years or so.
I would make a comment on the recycling, that we've all seen these charts for EV uptake that look like that, and that may very well be the case, but as you mentioned, after 8 or 10 years, it's a different equation, because we will be seeing that the first batteries will be coming back. They're already coming back from the initial hybrids that appeared last decade. It will go like that, and then it will start to go like that, and none of the charts actually look like that. They're all sort of with some line that's heading off into the stratosphere. But in fact, if we get the type of battery recycling that we get currently from lead-acid batteries, much of the lithium and cobalt that's currently going into these projections is eventually going to be coming back, and it's going to be coming back probably 6 to 8 years after it's gone into the initial battery. And so then we will start to see a evening off in the demand, because cars will be going out of service and their batteries will be recycled. I think Tesla have like an 8-year guarantee on their batteries. And after the 8 years, you would not want to be paying for a new Tesla battery. You would probably prefer to scrap the car and scrap the battery, and then it will come back. One thing I'd note, we haven't spoken much about vanadium here. Because vanadium is a component in VRBs, vanadium redox batteries, and there was a comment today about lithium ion and its applications for large-scale storage. But then, if you look, the world's largest supposed lithium-ion battery is, in fact, a battery farm in South Australia, and it's a farm. It's actually a lot of small lithium-ion batteries. You cannot have the type of scale in a single battery with lithium ion that you can with vanadium, where they can be shipping container sized batteries. And so vanadium is a new factor there. But vanadium, for many of the people in the VRB sector that I speak to, they say that when the price is over 10 per pound, they can't do it. Now we're back at 860, so that type of technology is doable. But if they fear that the price is going to go back to 16 or 25 in the VRBs, then they're not going to develop them, because they think that they won't be able to have a viable market at those higher price points. So it's a bit of chicken and egg. Are you going to be developing VRBs because you see that there are potentially mines that can supply that? But if there aren't enough mines, then the price will spike. The price spikes, the VRBs are unviable, and once again you get this boom and bust type scenario.
There's a very interesting move in China, I think, for the recycling. So they're collecting together the cells. I was in one of the Chinese government research arms a couple of weeks ago. So they bring in the used cells, they're testing them, whether they're good enough for reuse and repackaging them. They're also taking, where they know what the cathode is, they're able to scrape the cathode and recycle it without a full reprocessing loop. And then they only recycle the very poorest of the cells, and at the moment they don't take the lithium. It's not economic. But with the high nickel, high cobalt, and with that sort of triage of the cells, it's seeming that it could be economic or more standalone economic. So we don't have quite the long-term delay in it coming to the market. We do believe it'll come in, particularly in cobalt and nickel, where again the super alloys, we always forget them, but they are heavily recycled already. So when you're looking at the percentages of recycled, you've got to realise that a lot of that metal is already going round and round. Sorry, you had a question.
Yeah, just looking at the installed supply chains at the moment in Europe. So, I mean, you can produce more material, and that's great, but getting it into the car plants, the installed bases today, to get 1 million vehicles a year coming out of Wolfsburg, or 500,000 out of Sunderland, or wherever the production is going to be. I mean, how are you feeling about getting that material from your mine through a supply chain in the European supply base and getting to those vehicles? Because right now, I think it's very underdeveloped and a lot of money needs spending.
Yes, I certainly agree. There's going to need to be a lot of investment in localized manufacturing facilities throughout the supply chain. There's a lot of talk about building out a European EV production kind of network, so going through your battery production and your motor manufacturing as well, and building that out in Europe. But it's not necessarily all throughout the supply chain where it needs to be localized. So Europe doesn't exactly have a wealth of lithium operations. It's going to need greater imports of material from outside.
Sure, but if I look at someone like Volvo, who are saying that by 2025 they need as many batteries just for Volvo as was produced in the whole world last year. That's just Volvo. I mean, how are you going to get all this material through Europe and getting output? Because right now, I don't see how you supply these car plants to get the exit of EV vehicles coming out of the production line.
Well, I think there are enough lithium projects being developed at the moment and known about that potentially can supply that demand. I can't say the same thing about cobalt. And other factors like fluorspar, which is the electrolyte in lithium-ion batteries. Graphite looks like there's enough supply. So I think the weak points in the whole LIB story are the cobalt and the fluorspar.
Yeah, and probably high-purity alumina as well for the separators. I think part of the problem is the investment question we raised earlier, which is who's actually paying for the mines, and the only people who's generally putting the cash in has been the Chinese to date. So there has been a dearth of investment. But you also have a problem with hedging your price risk. So the automakers are very used to being able to pick a price and be able to negotiate a long-term contract and shift some of that price risk out. And it's quite a big learning curve for them to move to a market where the more you buy, the more you pay. They're very used to the more you buy, the less you pay. And in the conversations I've had with people, that's a big hurdle for them, and they can't offload that risk to the markets at the moment. Maybe the LME will get some liquidity, but it's quite hard to manage that risk for the foreseeable future. And then you've got a technology risk on top that you don't quite know. So if you look at what BMW is saying, they're offloading the technology risk and they're buying kilowatt hours stored when they're looking at their new contracts for sales, and offloading the technology risk and the purchasing further downstream. But it is a challenge.
Yeah, no, I just don't think enough money's been spent on the supply chain yet. When BMW get fined $500,000 and Porsche get fined $500,000, etc., that's just another bit of cash that can't be put into the EV network yet. And you're going to risk oversupply in the short term of your material if it's not ready for the supply chain.
And the scale of the plants, you need to be cost effective. You need to go in quite big. There's a question at the front here. Yeah.
Thanks. I just wanted to tease you out a bit more on cobalt. You've said that you can't see it being substituted out of batteries, but as we all know, and heard that you can't see too many alternative supply. As I understand it, 2/3 of the world's cobalt comes from the DRC, which brings political challenges. Is there any other prospect of any other primary sources of cobalt, or does it mean sort of cobalt, nickel, laterites, or sulfides? And is the component of copper in any of those enough to affect the economics and incentivize new projects? Or so broadly, where's the cobalt coming from?
Okay, I mean, I could start off and then maybe John to chip in.
Yep.
So we've got some assets in America, not very big, Cobalt, Fortune, et cetera, you've got Norilsk. They do have quite a strong cobalt byproduct, and that's a good old-fashioned sulfide. Or if they can get some investment, and the financing situation there's a bit complicated. You've got the Australians, but I think you're right, it's the nickel laterites, and if they can manage to get the high-pressure acid leach working, if they can get it working near capacity, if they can do it at a reasonable capital cost, and they can keep it working when they've turned it on, which isn't guaranteed, you do get a cobalt flow, but it won't replicate what we'd need out of Congo. And actually regulating and supporting the industry in Congo such that it's an acceptable source is probably of primary importance. There is not enough in the rest of the world. We have 300 projects on our database, but it's not the volume we need.
I thought the stuff in the States had arsenic issues with it, because most primary nickel ore outside the Congo has got significant arsenic, and that provides environmental challenges as well.
Yeah, I think yes, there's radioactivity in some of the other ones. Arsenic, the industry's learned how to deal with it to a large degree through the copper industry, so there are techniques with smelters that you can use to capture that in inert form, but it does add a cost again, and if you've got a lower grade asset than you perhaps had in Congo, and you're adding on an extra processing step, that provides a further challenge. Yeah.
I would also make a comment that the big projects have been burnt. After Goro, Ambatovi, projects of those size, you know, the multi-billion-dollar nickel projects that have the cobalt as a byproduct, they're not a driver of the nickel price has to justify the project. The nickel prices are not justifying them at the moment, and they have to justify them at a much higher level than where we are at the moment, and at a sustained higher level, because we've seen that some of these projects that cost multi-billions were actually cooked up during the great days of mid-last decade for nickel. You know, when people are not going to be initiating projects on spikes anymore. They have to be sustained higher prices in nickel, and we're not seeing it because 5-10 billion, way too much.
We did have one more question. It's going to have to be one-word answers and a very short question because our time has just gone red.
Okay, pretty short. Just on all three main metals, nickel, cobalt, lithium, what sort of percentage demand lift are you looking for by 2025, specifically, either in total or specifically from battery metals?
Well, on the cobalt side, by 2028, we see a doubling in demand for cobalt. For lithium, we're talking around the 1 million tons of lithium carbonate equivalent by 2026, 2027. So nickel, off
Quite
the top
small.
of my head.
Relatively. Yeah. Because of the growth of stainless and the other end uses, it's a small proportion, but very, very fast growing. Vanadium, wow. It's almost nothing in VRBs at the moment.
Yeah, it's almost nothing, but the thing is that will be all incremental on top of whatever the potential expansion in base demand for its alloy uses in steel.
And rebar.
So it's all up from here in vanadium.
Good. We overran. Thank you so much. It was very interesting. Thank you all.
Thank you.